Right now, let's start the whole introduction with the calendar scanner. In this form, you can set all the criterias that you want to run the calendar scanner for. In the ticker dropdown, you will see all the tickers that you can run the scanner for. And in the first two are lists. You can define those ticker lists in MyScan. I will show you later on. But I have created a list which contains all the tickers. And I have created a list which contains the SPX, the regular SPX, and the SPX AM expiration as well. Now, for making it easier to understand, let's run the scanner, for example, for SPY. Right now, what I'm looking for is a call calendar spread. Here you can select if it's a call or a put. The price should be from 0 to 500. You can define prices lower than 0, which means that you are looking for a credit spread, which is not possible in a calendar spread, obviously. DTE stands for days to expiration, and right now it's configured to run from 7 to 45 days to expiration, and the front data option is from 15 to 30 by default. This defines how far the front leg, the short leg data has to be in this calendar spread. This other data option is the cumulative data of the position. Right now, let's leave it like the default value. The expiration diff tells you how many days should be between the expirations of the short and the long leg. Right now, let's choose 3. You can select multiple expiration differences. The skew refers to horizontal skew in case of calendar spread. So, for example, if I say that I am only looking for backward dated skew, I should change it to 0, but for illustrative purposes, let's stick with the default value and then we can later on change it. This field stands for reward to risk. Right now, let's stick with the default. The range shows you how far the break-even points of a calendar spread is. Let's stick with the default right now. I can click on this as skipping the earnings expiration cycles, which is not relevant for SPY. Historical RV stands for historical relative value. Later on, I will show you examples with that. And the minimum value defines what the minimum value of each leg has to be. It's relevant if you run for a list and you want to omit very illiquid strikes. Let's go back to SPY. And there is another option where you can search for specific stocks that have earnings within these days of ranges. So right now, let's run the search with these settings. And first of all, you see a table and you see these columns. You can show or hide columns based on your preferences. If you click on these names, you can turn off and turn on that column. And what you see is a table with all the results. Right now, the table is sorted or grouped by expiration. If you look at the expirations, right now what you see being grouped by is September 16, September 19. Here you see September 23, 26. Here you see 30 and October 3. And these are only results with 3-day expiration differences between the legs. As you can see, if you scroll down, you only see 3 as in the diff column. So let's go through all the columns that you see. The watch columns contains different specific functionality. If you click on this button, it will save you this specific calendar spread into your own watch list. If you click on this button, it will show you the risk graph. If you click on this button, it will copy the trade to clipboard, and then you can paste the trade to Thinkorswim. The ticker column shows you the ticker symbol, which is obviously SPY because we are looking for SPY in this specific scan. The expiration shows you the specific expiration. Right now you will see these expirations. And as you can see, these expirations are also shown here as the grouping title. The differences are the expiration cycle differences. DTE is 7 7:10, which shows you that this date is 7 days from now and this date is 10 days from now. You will see all the combinations in here. The strike is the selected strike based on the front data. The opt is call option because we have chosen call in here. The target difference in percentage column shows you how far the target price of this calendar is from the market. The underlying price of SPY is 398 and the target price of this calendar spread is 405, which means that the target price 405 is 1.6% away from the market. The target delta is the front delta in case of calendar spread. So the short lag, how far is the short lag in this example? The short lag has 29.53 delta right now. The price of the calendar is 25. The maximum profit you can make with this calendar at expiration, as shown in this expiration graph, is 262. The risk is 25 obviously because it's the same as the price. And the risk reward is 1048%. The skew as defined in here, but we are not specifying backward dated skews here. The skew is minus 2.01, which means that the short lag has higher implied volatility than the long lag. This is the term structure, or you can call it horizontal skew as well. The volume, these are the volume numbers for each lags. So 405 in this expiration had this volume, and 405 strike in this expiration had this volume. Right now when I'm recording this video, it's in the morning in Europe, so the market has not opened yet. So these are prices from yesterday close. Break-even 1 and break-even 2 stands for the break-even ranges. So you can see the break-evens here and here. And these are the exact number of break-evens. And the range between the break-evens are shown here. The delta, the cumulative delta of the position is 1. The cumulative gamma, theta, and vega of the position is shown here. You can sort the table by any column. You can sort by risk reward. You can sort by skew. For example, let's see where the biggest skew is. This one is the biggest skew. If I'm interested in this spread or this spread, I can add it to my watch list by clicking here. And later on, I can refine this trade. For example, let's see only backward dated skews where the skew is negative. And here are the results, almost the same as before, I guess, because there was no contango skew in this type of search criteria. But you can also define here, for example, if you don't want to see illiquid strikes like this one, you can set the minimum volume, for example, to 10, and then this one will be left out. Let's see, there will be no 66 by 6. Yes, there will be none, because we defined that the minimum volume has to be 10 on each legs. Previously, I said that we should stick with the default range, which is 0 to 100%. Right now, you see that the range ranges from 5.5 to 6. You can define your scan like you really want to see only 6% ranges in calendar spread. And then you will see only this list as a result. You can also further refine that, for example, I'm looking for at least 2000 percentage points risk reward, and I only see 2 results. I go back to 1000. You can copy the whole table to clipboard, export to CSV, or export to Excel. If you click on compare results, you will see the results in a different view. Right now, what you can see is that if you want to compare, for example, 415 strike with these expirations, you will see that the 415 strike, like here and here and here, have different prices. So you can easily compare the different strikes in different expirations. If you are, for example, not interested in break-even 1 or 2, you can hide those columns. If you are looking for the closest target price, you can sort the table by TG percentage column, and this shows you that 411 is the closest calendar spread in terms of the underlying price. If you want to save this scan, you can click on this button and let's save it. Let's call it SPY 3 and click on save. And I already have different templates, but here I can click on SPY 3. And if I want to be notified, as I mentioned in the beginning of the presentation, you can click on the alert button. And whenever something new comes out of this result, you will be notified by email. You can disable the notifications anytime later on if you click on the alert button again. So let's run something else. Let's say I'm still looking for SPY calendars, but I'm only looking for very cheap ones, like below $20. Days to expiration should be closer, like 0 to 21. Front data should be closer to the market, like 30 to 40, if this exists at all. And the expiration differences should be 3 days, 7 days, and for example 14 days. Actually, this list is based on the DTE you select in here. So if you select higher DTEs, there will be more expiration differences. So I'm running the scan for 3 days, 7 days, and 14 days of expiration differences. And I'm only looking for backward dated IV skew and 1000% reward to risk. Range should be 3% and minimum volume 10. Let's see if this exists at all or not. No results. So right now I'm not finding anything that costs less than 20 bucks. Let's say it should be 50 bucks. I have only found 2. If I'm looking for this specific scan, for example, I can save it as a template. And right now I only can see 2 results. But if I want to be notified, I select SPY cheap and click on the alert button. And whenever there is something coming up for this specific scan, it will notify you via email. These scans are running every 5 minutes. So if NinjaSpread is finding anything new, it will notify you every 5 minutes. Now let's say I want to compare different expiration differences. So right now we have seen that for this search criteria, we have only got results for expiration 3. Right now let's compare 7 and 14, but obviously we need to change the price. And let's try with that. Nothing is coming up. Let's go back and try to be less restrictive. I guess the 1000% reward to risk is the problem in here. Now I can see a lot of results. It shows you 7, 14, 7, 14 as expiration differences. And as you can see, there is a contango horizontal skew in here, because in this calendar, the short leg has lower implied volatility than the long leg. So if I want to omit these results with positive values, I can always set it to 0, and it will show you only backward dated skew term structure in terms of horizontal skew. So these are the skews in these combinations. Right now, the best one in terms of reward to risk is 308% for 407, and it expires in 14 days, 14 and 21 days. And it has a 3.1 delta. If I like it, click on watch list, and later I can analyze it or copy it to Thinkorswim and analyze on Thinkorswim. Actually, I would like to show you very quickly how to analyze it in Thinkorswim. So if I click on this Thinkorswim button, it's copied to clipboard, and I go back to Thinkorswim, and here you can click on this button and it will paste it here. Right click, analyze the trade. So here is the trade that I'm looking for in NinjaSpread. Whenever you click on this button, you can copy it to clipboard, you come back in here, paste it, and there is another one in here if you really want to analyze it in Thinkorswim as well. Now let's scan for something else. let's scan in the all list that contains all the tickers in NinjaSpread. The expiration difference has to be 7 because most of the stocks have 7 expiration day differences between the legs. It has to be backwardated horizontal skew. The price should be from 0 to 100 days to expirations. Okay, for it's good for example. Front delta 20 to 40, and it shouldn't be too illiquid. And let's find the ones with high risk reward to risk. It's running a little bit longer than the one because it's running all the tickers. And what I found is 2 tickers. One for DAQ and one for Oracle. They all have high risk reward and backwardated high skew. If I want to see more results, I set the reward to risk, for example, to 500. And the range should be the default, and let's leave the rest like that. And now I have found more results like DAQ, FDX, GME, IWM, Lyft, Mo, and Oracle. I can click on any of these and add to my watch list to further analyze later if I want to do it. I can sort the list by risk to reward, and later on NinjaSpread will notify me whenever it finds new ones. For example, if I only want to see 1000% reward to risk, I can save this as a template. Let's call it 1000 RR, for example. I can select it in here and be alerted on it. So whenever NinjaSpread finds something that meets this criteria in all the stocks, it will notify me in email. Now let's do something else. Let's look for all the stocks. I'm not specifying the reward to risk, don't be restrictive. I'm looking for all the skew in horizontal skew. I'm looking for lower liquidity and be it earnings between 0 to 7 days in the next coming weeks or days. This is what I have found. Only Oracle meets those criteria, and as you can see here, Oracle will have earnings in 3 days, and these are the calendar spreads that can be found on Oracle for these criteria. Let's broaden the earnings days. Let's broaden the earnings ranges for, let's say, 0 to 20 days. And I have a different result. CCL, FDX, MU, Nike, and Oracle. They all have earnings in the next 20 days, which meets the criteria here in terms of calendar spread specific conditions. Let's look for something else and search for put calendars as the market is falling nowadays. These are for put calendars, CCL, FDX, MU, Nike, and Oracle, the same result, but with put calendars, and obviously targeting lower prices based on front delta. If I'm only looking for example, at the money calendars, I would set to 45 to 55, the front leg delta, and let's look for those. I have only found fewer results. That means those at the money calendars. If I want to have something very out of the money, I will go from 0 to 5 delta as the front leg. And let's see if we find anything there. Yes, we find like CCI. You can tell it's very out of the money because the target price is 30% away, 14% away, 18%, 5, 14, whatever. Let's do it on the call side just to have another example. They are also very out of the money, 35, 11%, 16, and so on. And every single search that you are looking for later on, you can save it here and be alerted, or just save it. You don't need to be alerted. You can also save it like, let's save it like all OTM. And later on I can choose it and search for it, even if I don't want to be notified, right? I can go back to SPY 3 that we created earlier. There's nothing in here. I can disable the alert, or I go back to 1000 RR that we created. I can disable the alert. So you don't have to be notified if you don't want to be. The default is alert is not turned on. That's the default. So if you want to be alerted, click on this. Otherwise, you can save any scan and run later on if you want and see if you got any results. So this was the calendar search functionality, and as you can see here, there are some other system scans. I call them system scans because there is no way to set any criteria here. These are system scans that run with these criteria and nothing can be changed on those. It's just for having some kind of system scans that are already predefined. Here you can look for skew. The C in parentheses means it's a call, and these are scans for puts. And if you click on how to videos, you will find some tutorials in here. But the main functionality is the search submenu in here. These are only predefined scans. If you want to run them, it depends on you. I would run specific ones in here. These are only for example purposes. If you are not sure what the columns mean, you can hover your mouse over the column and it will explain you very shortly. And if you click on the question mark in here, it will give you a short explanation of the result set and how you can interpret it.